Cloud with this week's precious metals market update. I want to jump right into the SDRs and the IMF approval of China to get special drawing rights that were approved on Monday of this week. And 9 months from now, sometime this next 9 months, China will have to reveal their tonnage of gold they have and gold reserves. And this is what everybody in the world has been looking for, is waiting on these numbers to come out. So now we know they're going to come out, and China becomes the 5th special drawing rights currency, along with the euro and the dollar and the pound and the Japanese yen. So this is a game changer. Yesterday, on the very first day, on Tuesday, December 1st, very first day, $1 trillion moved out of the U.S. as soon as China was given the SDR rights by the IMF. AXA Insurance and Charter Standard, two of the largest in the world, moved $1 trillion out of dollars and into yuan, and the dollar went from 100.70 down to 99.85. So we've seen a crack in the dollar that we've been talking about for several weeks. And I can only tell you, based on the Baltic Dry Index, the lack of products leaving the United States, that it's not far off till we're going to see a bigger crack in this dollar thing and see it go straight down. So we think the corner's actually turned. Am I saying that gold is bottomed? I'm not sure about that. Paper markets can be driven, but we've seen such a drop in shorts. Now, if any of these decide to go long in the paper market, we would see a quick knee-jerk price jump in the physical market. And yesterday, when we saw that, we've been talking about people think they had 200 ounces of gold for every ounce there really is physically. 200 people are claiming it through paper contracts, but that number jumped all the way to 300. So this is getting very scary. I mean, the paper game, even we've always had it, but always remember the key driver is the dollar and where the banksters or fraudsters or whatever you want to call them want to drive markets. But when they go long, you got to remember when gold went from 256 in 2000 up to 1900 in 2011, they were buying. They were doing paper investments, but they were buying long instead of short. So when they come back long, and that could be literally at any time now, once they get it pushed down. But I want to tell you about the most dramatic thing I found in my work over 40 years of doing this is if you go back to 2000, when I gave a buy signal, as did many others, in gold at 256, it went all the way up to a little over 1900 in 2011, and now it's back at 1,065, let's say. So if you take 4 times 256, comes up to 1,024. And if you look at the oil markets and the stock markets and the bull markets the last 30, 40 years, you'll see that there's a big surge like we had in gold where it went up like 6 times and then fell down where it is now. It's only up 4 times, and then it doubles again quicker than it did the first time, so or quadruples again. So I really feel that we're very close. You see numbers out there on gold and 10,000, 12,000, you're sitting there scratching your head saying it's barely above 1,000. But you got to remember the rise that it had from 2000 when it was 256 up to where it is now, 1,060 something, and all the way up to 1,900. So what I'm saying is I feel we're very close to that magic number of buying. Now, certainly it can break support and go lower. I'm not saying it cannot go lower. But I'm going to tell you, when it gets to 1,024, it's going to set off so many buy signals if it does. And then I really believe it'll go up quadruple in about 7 years rather than 15 years. So your buying time is quickly approaching. And when you look at, I've talked about several times, the money supply being doubled in 7 years. So just think, we had 6 trillion in the M2 money supply, and now we have 12 trillion. Then you've got to know at some point you cannot keep printing wealth and printing money because it doesn't go proportionally. It goes to the wealthy get wealthier, middle class gets poorer, and the lower class stays in the same position. So you've got to realize that this is right on the verge, in my opinion, of a change, because you're not going to have silver and gold both selling at below mining cost, because these major mines go under, and or they close. And remember, if they're closed for so long, they've got to reapply and reclaim land and all of that. So we are really coming to a crux. We're coming right to a point where I think gold and silver both will bottom. It could be a little lower than it is today, but if gold goes over 1100, I would buy it if I were you. If it goes down below 1024, I would buy it if I were you. And on silver, I'd be buying right now. I wouldn't even worry. I mean, that's when it goes, it's going to go so fast. It reminds me of 2008 when it got down below $10, and then from the fall of 2008 till the fall of 2011, in only 37 months, silver went from $9.50 to over $47. And I do think we're going to see this kind of move again. So on silver, I would not even wait. We're breaking records at the U.S. Mint, the Canadian Mint, the Austrian Philharmonic Mint. The demand for physical silver is unbelievable, and this price cannot and will not stay this low. Yes, it stayed there longer than I ever anticipated. I'd be the first to admit, but that still doesn't mean I'm wrong. It just means that the timing was off at some point. But just watch it and watch that dollar that we've talked about. And if you have any questions, we'd love to talk to you. You can reach us at 800-247-2812. That's 800-247-2812. And if you need help with a self-directed precious metals IRA, Dan or Kathleen or I could help you set that up where you can have precious metals, physical precious metals in your IRA. But I think we're moving into a very interesting point in time that could start literally at any time. But kind of watch those numbers I gave you earlier, over 1100 or below 1024 in gold, and you're going to see a lot of buying going on, including central banks that we're being told a lot of them have been buying. But just remember, China, sometime in the next 9 months, will reveal their gold reserves. And that one thing, if it's some of the numbers we think it could be, you're going to see gold and silver explode immediately. So we're in that 9-month window that started November 30th. With this week's Precious Metals Market Update, this is Tom Cloud signing out.